What's happening, guys? Brian from Santiment here. I wanted to jump on and give a quick update about the crypto markets right now because we just had an interesting development happen. Bitcoin managed to drop below 32,000 for the first time since June 26th. So, just about 2.5 weeks or so is the last time we were at this low of a price. We can zoom in here and see exactly when this last occurrence happened. We were at, a little under 31.8 right now, and we were last there June 26th, just as I said. We can look at the last 6 months of daily active addresses because this is one of our prime leading indicators that we like to look at to give us indication on, the probability of prices continuing to move in their direction or perhaps developing a bullish divergence when active addresses are staying high and prices are low, or vice versa. Sometimes prices are going really high, but daily active addresses are kind of staying around where they had been, even when they were really low. So right now, what we're seeing is the significant drop off that we last saw in, mid-May here, following this huge drop off. We haven't really recovered to the 1.1, 1.2 million active addresses per day. Active addresses, by the way, being the amount of unique addresses interacting on a given network, in this case Bitcoin, at any given time. So we're looking at 1 hour intervals, but it's summing it by full days essentially. And uh, right now, we're just not getting the kind of daily activity that we're hoping to see if you're planning to celebrate an upcoming bull run. Of course, this is only one metric. Anything can happen at any time, but based on probability and history, looking at this metric, we're not getting the activity we want. In fact, it's even declining a little bit since the huge drop off that happened around, May 14th to May, you know, I guess 23rd, when it really bottomed out here and then recovered, and it even got a little lower. It really hit its low around the 22nd and 26th, and right now we're right back to where we were at the 26th. So what we'd be looking for right now, if we're looking for positive signs, would be, a mini spike like this with a little bit of sustained bars at that level. Um, if we don't see that and we continue to see flatness, price might follow and stay flat and stay in this long, boring 31K to 36K range that we've been in for a while. But now we're getting toward that bottom end of the range, and this could lead to a little bit of extra panic and FUD because we're not comfortably in the middle like we were just in the past day or two around 33, 34. Even those little slim differences can make a big difference in people's sentiment toward an asset. That's what we've really seen in crypto. So essentially, what could happen is price could potentially drop even further. I'm certainly no fortune teller, and we don't give investment advice here on this platform. We're simply trying to use data to give historically backed strategies based on what we have seen in the past from similar patterns, right? But if price were to fall lower, and active addresses kind of stay in this 800K range, maybe 750K range, that actually could be a good sign. And it means that there are some buy opportunities opening up because activity is staying at least in these levels that we've seen since the post dump in mid-May, and not dropping the way price does. But if it follows price and activity drops off and everyone gets freaked out and doesn't want to move any coins, that's bad. That would lead to dormancy, and dormancy is what sinks prices. You need activity and utility in order for prices to generally rise. We see that in token circulation, which I'll talk about on another video, but it's also true in address activity. Those two metrics lend very well together, and right now activity is looking not great. It looks like this mild sink here is justified by the mild sink here. So that's one metric I wanted to show. Another one would be mean dollar invested age. In this case, we look for sinking mean dollar invested age as a positive sign that the average age of investments in Bitcoin is getting younger and younger and smaller, indicating that there are more new entries into the space with new addresses, new investments, combined with the fact that previously dormant assets, or I should say dollars in addresses of the assets, are continuing to move their coins again. And if those dormant coins or addresses start moving, that's a great sign. And they're the ones that can really cause these really large drops, causing, the mean dollar invested age to go from 242 on January 14th all the way down to 178 on April 18th. That's a huge drop. And what we're seeing now, I guess before I go into what we're seeing now, look at this warning sign that we saw between around April 18th to May 12th. You notice how the pattern of it just continually dropping the way it was since, late January stopped right around here, right after the all-time high happened. This is when, if you're looking for every single dip as kind of just a way of shaking out weak hands before rising higher, this would be the signal to say, okay, maybe this dip is a little bit different because of the fact that mean dollar invested age is no longer sinking the way it was, like on this dip on February 20th or so, all the way to the 28th. Notice how the mean dollar invested age was still getting lower and lower and lower. That would be a good sign or vote of confidence if you're a bull, that the price is going to recover, which it very quickly did after that one scare week that we really saw before the recent one after the all-time high here. So after that, of course, when we got the warning sign, the mean dollar invested age started to rise. And that has a lot to do with why there hasn't, at least yet, been this huge bounce or recovery in Bitcoin's price. Like everyone's hoping for it to go back to 40K and beyond if they're a bull, which most people who are watching this channel are. We're going to want to see a little bit of a flattening out again, which would indicate a reversal could be upcoming again. Now, flattening out doesn't always mean it's going to go the other way right after, but it can at least mean that there's a shift in, what large wallets may be thinking, or there's a shift in the amount of new investors coming into space, which can be a good shift or a bad shift. And, if we look back at like the last 6 years here, you can see these huge waves that kind of correspond with bull and bear runs. And the most notable one I want to point out was the one that happened in late 2017, which, some of you veterans may have been around for. There were even earlier ones, of course, but personally speaking, the first big bull run I experienced when I got into crypto in 2016 happened in late 2017 here. And that's when we had a very, very similar occurrence happen where the mean dollar invested age was up around, 446, 447, and then just fell off as the prices start to rise and more people began to get in the space. This was the first time I remember hearing in the news that people are talking around the Thanksgiving table about, getting their grandmas into Bitcoin, and all these people who had never heard of crypto were first hearing about crypto right around this range. And the amount of dormant tokens moving combined with the amount of new addresses coming into the space for the first time really allowed this line to fall and propel Bitcoin's price upwards to 19, a little over 19K, depending on the exchange that you're on. Some even reported 20, but most were somewhere in that 19.5 to 19.8K range, if I remember correctly. But long story short, look at this flattening out. That's very similar to what we were pointing out here. I'll zoom in so you can see it better, because when it's granular like this, the flattening out patterns are quite obvious. And we had this big flattening out from about, I'd argue right around maybe even December 16th, 17th or so. It was really starting to slow down at the pace that it had been on, especially from late September all the way until then. And then we had this week again right after the all-time high, where the mean dollar invested age flattened from about December 19th to January 7th. So I'd call it 2 weeks or so, maybe even 3 weeks, where it was flat. And this was the warning sign, that these big drops weren't going to be immediately scooped up the way all of these smaller ones had on the way up. We had this one recovery right at the end of mean dollar invested age going flat. And then right here, January 7th, that was pretty much the bottom for mean dollar invested age. And it just started to rise and rise and rise, meaning addresses and dollars invested were becoming dormant in their respective addresses again. So this was the sign that we were not going to bounce back up, anytime soon in 2018. And then 2018 ended up being a not so great year for crypto in general, and so on and so forth. I just want to point out how mean dollar invested age is a really cool macro metric to give you some insight as to, how much dormant dollars invested are happening at any given time, and whether it's a good sign or bad sign when prices move in one direction and the mean dollar invested age metric follows or doesn't follow. All right, last but not least, MVRV ratio. This measures the average trader returns over a 30-day period. We choose 30-day because it's a nice hybrid between short-term and mid-term traders a lot, and that's kind of what many people have the capacity to keep up with in terms of market movements. And it's a really telling metric that corresponds with prices a lot as well. So on this 30-day MVRV chart, this is essentially measuring average returns, not just the 30-day return price of Bitcoin, but the actual average returns of traders through all of their FOMO, through all their FUD, through overly correct or overly incorrect decisions that they make, panic selling or overbuying when a price is buying, those kinds of things. They're all factored in to show where average traders' returns are. And this is a great metric because it tells us what crowd sentiment is and how that's impacting the markets. We can see right here, we very clearly had a massive spike right before the top happened in 2017. And let's look more recently now. Let's keep this number in mind before I do. So it got up to a little over 74% on December 6th, 2017. So check out how similar this was. Now, obviously the percentages aren't the same, but still relative to the MVRV around that date, we had this big spike here. I'm trying not to cover it so you can actually see it, but right there is where we had the biggest spike in MVRV, I think, of the year. Let me double check. I don't want to say something that may not be true. 20. So no, I'm totally wrong. So it was actually a little higher in January when we had this first big bump that went all the way up to 40K. And then notice how it fell all the way back down. And then we got into the negative. The average traders back in late January were suddenly at negative 10% after they had just been at plus 40.9% over the 30-day MVRV span. So now we'll get out of that year perspective, go back to just the last 6 months, and we can see that on a smaller scale, this big spike happened again. And when MVRV got super high, all the way up to 29.5, it looks like it peaked at, that's when the price just crashed and went from 57K all the way down to 45K. It repeated. We had a smaller spike in MVRV to 17.85%, and then eventually climbed all the way up to the all-time high, 64.6K or so. And then we had this big crash. Notice how low MVRV got. That indicates that it's a lower risk time to buy. You can buy against the crowd when MVRV is really low, and you'll generally benefit from that because this is when a lot of people are fudding and getting out of the markets. And as we've stated frequently on our This Week in Crypto calls, myself and Dino, markets tend to fluctuate in the least expected way. If the crowd believes that, prices are about to recover to 60K tomorrow, prices are more likely to go down than up. If people overreacting to this mini drop, I'm not going to speculatively say whether it's overreacting or not, of course. So if they are panicking, I should say, over this drop here, that could be a good sign because as you can see, we're at an average MVRV ratio of negative 6.8% or so right now. That means it's a better than average time, or at least less risky time, to open an investment because MVRV, no matter what the time frame, the percentage will average out to zero. And that doesn't mean there's an equal amount of winners and an equal amount of losers, but all of the combined average trades going on will hover around 0% given enough time. Like if I go back to the last 6 years again, and I averaged all of these ups and downs together, it would pretty much be right at 0%, whether it's a 30-day MVRV, a 365-day MVRV, what have you. So when we're in the negative like this, there's generally going to be some bounce, just like there was back in 2018, to at least get the MVRV positive again. And then when it's positive, it's more likely to go back down again. Rinse and repeat. This is the cycles of the markets. We're basing this all on probability. Nothing is a certainty, but if you combine all three of these key metrics that I just went over, I guarantee you will improve your trading. Try a Sandbase Pro account. You can open a Santiment account today, get 2 weeks free, demo everything. You'll have it all based on real-time stuff, historical stuff, everything that I can show you here. You'll be able to try out for 2 weeks. If you love it, become a Sandbase Pro member. Prices start at just $44 a month. We've got an awesome community. You can talk to myself, Dino, our other advanced traders who are part of our Discord. And regardless, I hope that we can see you guys on Friday. We have a This Week in Crypto call where we'll do an hour to an hour and a half of market updates, going over many of our metrics here to share where we're seeing the health of the market stand. And we'll be answering questions. So pull up a chair and check us out Friday at 7 a.m. Pacific time or 2 p.m. UTC. Wherever you are in the world, we'd love to have you, and I'll talk to y'all soon.